Hey, good afternoon. It is Tuesday. It's September 2nd, the first trading day of the month. And it's a Tuesday after a 3-day weekend. So it kind of felt like a Monday all day long. But guess what? It's Tuesday. And we had trading today on Wall Street. It wasn't a completely fun day for some investors. Nvidia sold off by 1.95%. Apple sold off a bit. Amazon was down 1.6%. Google down 0.73. Meta was down as well. Software space was sold off. We'll see if that's going to recover. We have CRM, Salesforce earnings tomorrow. Tesla sold off. There was a little bit of green. Looks like the drug companies made a little bit of money today for their investors. That looks pretty good. The healthcare plans kind of held their own. That looked okay. But it was not a positive day overall. It was a down day. And, we're in September. September tends to be a month when we have some sell-offs. So it's not like a complete surprise, nor is it the end of the world. We may have a correction. That's all right. We can deal with a correction. If you're going to discount really good companies that are, good to have, I'm good with that. If the stock market wants to discount great companies, let's do it. I'll buy more shares in companies that I want to own shares in, and we'll be good to go. So the way that I invest and the way that I analyze stocks is I want to own great businesses, companies that are growing revenues. They're profitable. They have terrific margins and they have terrific cash flow or cash flow potential. Even if they're small, young businesses that aren't cash flowing yet, but they have really good margins, we can forecast that out and buy terrific businesses that are going to be worth a lot more in the future. I also want good balance sheets. I don't want a great idea, great company that is going to be doomed with too much debt. So want to look at that balance sheet, make sure we have a clean company. Balance sheet's a little bit like your credit history. If you have somebody who has terrible credit history, something wrong there, something going on. And debt, if you have too much debt, why do you have too much debt? Why did you have to indebt yourself? You should have been able to capitalize yourself with investor money, get that idea to market, and start cranking out those profits and that cash. So when we look at stocks on my channel, we look at intrinsic value, looking at a forecast of free cash flows in the future discounted at today's value. We'll also look at that balance sheet and make sure we have more cash and debt. We're also going to look at profits in earnings per share and discount companies based on their profits to see, do we have a discounted stock? It's a little easy to find great businesses. Here's a great business. Here's a great business. Here's a great business. So it's not a matter of, the hard part is finding those great businesses. The hard part is, when is it the right time to buy Amazon? When is it the right time to buy Nvidia? When is it the right time to buy Apple? And I believe that it's when the market has sold off a stock and misunderstands a company, or maybe is valuing or underappreciating the company in a particular way, and that could buy it at a discount. So that's what I'm after. I'm after great businesses that are growing really well, that are discounted, and are going to be great investments going forward. Today, I wanted to go over some stocks that I thought were interesting. One of them is Zscaler. They announced their earnings. Google, they had some big news after the market closed that they are not going to be broken up. They are going to be allowed to keep the Chrome business active, which is good. And go over Alibaba, which has been on a hot streak. It's like a batter in Major League Baseball. Comes up to the plate and just rips a double through the alley. And the next hit back, hits a home run. It's just Alibaba right now is hot, really hot. Pitchers don't want to pitch against Alibaba right now. And then United Therapeutics, which had a stupendous day. I say that because the stock was up 34% for good reason. We'll cover why. That stock is up 34%. That's awesome. Man, I wish stocks were like that every day. My man Peyton, how are you, sir? Looks like Opera is benefiting from the Google News after hours. That is interesting. Thank you so much for bringing that up. Opera is a company that provides a browser in Europe. Looks like they're up 3.61% in after hours. They were down a little bit today, not out of the question because today stocks were really down. So for it to be down, it's a small cap, 1.44. And this stock, in my opinion, is discounted. It's kind of been sold off this year. And over the 1 year, it's not keeping up with the S&P, not keeping up with the NASDAQ. 5-year looks decent. Not going to, record any records here, but it's pretty decent. But maybe this thing gets on a hot streak. Maybe this thing becomes more desirable to companies like OpenAI or other businesses that really want their own browser. They can quickly acquire Opera Limited, which is a functional browser. And they've got their browser. They can get more users to operate on a browser they get to control. As opposed to OpenAI, now most users use Chrome, and their users have to go through their main competitor's backyard or front yard in order to get to OpenAI. Well, that's a strategic advantage given to our friends over at Google Alphabet. And they are my friends because I own Google Alphabet, so I'll consider them my friends. Thanks, Peyton, for bringing that up. Really appreciate it. It's good to see that, as a community, we can have more eyes and ears and analysis out there so we can talk about stocks that we're interested in. Opera has been a stock we've talked about, for about a month. Wasn't my idea, it was somebody else's, but it was a good idea. If we look at this company, it's got a small cap, 1.44 billion. Revenue, you're paying about 3 times revenue, which isn't bad. And when we look at the revenue growth, 30% revenue growth, that's not bad either. It's pretty darn good. The margins on this business, let's take a look at that. Remember, my qualifiers are high revenue growth. Okay, we can check that box. And look at these margins. Gross margin, 52, 55%. That's pretty good. Free cash flow, 102 million from this business. And overall, I believe this is discounted. This is a discounted stock. And really like Opera. Good to see that they're catching a little rally in after hours and following Google Alphabet's lead. Google's up about 7% in after hours. The news came out after the market closed. So we'll see how the stock performs tomorrow. Today we had a down day. The market did recover some of the losses late in trading. And we'll see if Google Alphabet can trade higher. That'll be an area of focus for me because I own Google Alphabet. Ben 10, how's it going? Good to see you. Yeah, today was a rough one for portfolios, but good diversification will help you out. Today is a day when you're really glad you have a few healthcare stocks and maybe a couple staple stocks, depending on your age. If you're a youngster out there and you're like, you know what, I don't need that capital for another 20 years, 30 years. Well, you can weather some losses in the near term and keep these great businesses that are just going to be worth so much more in the future. If you're an older investor, maybe you do want to diversify where you could, shelter some of your wealth in stocks that are really going to hold their value during periods of sell-offs. There's ways to really manage your portfolio while maintaining, a invested posture, staying in stocks so that you don't miss rallies. There's some rallies that catch investors by surprise, and you don't want to be out of the market when the market really goes up. So it's good to be diversified so you can stay in and weather some of these rough days. Now, the big question is this the beginning of a more substantial sell-off? Too early to tell, but it could be. September tends to be the month when we have sell-offs. And this year, I would say we're kind of positioned to have a good sell-off. We have high stock prices. We don't have any big news coming up. NVIDIA did their earnings. Their stock's been trading lower since their earnings. So there's no big news item that's going to help stocks, lift them up. So we'll see what happens through the month of September. But If we make it through the month of September and we're down 5-10%, I wouldn't be shocked. And it might even present a nice opportunity to pick up some of these stocks that have been waiting for them to get to a good price in order to buy. So it won't be all bad news. All right, so let's keep moving. We talked about Opera. So since we're talking about Opera, I'm going to talk about Google Alphabet a little bit more. Then we're going to hit Zscaler. If there's a member out there, you want me to look at a stock, please put it in the chat. If you would like me to look at a stock, you're not a member, no problem. Super chat gets you there. $5 super chat. All right. So Google Alphabet, these guys have been, there's been a lot of doubters. Well, two big stories have kind of held the enthusiasm down for Google Alphabet. The first one is the antitrust suit against them. Are they going to break up Google? That was a possibility that went away today. The second story is AI going to help or hurt Google Alphabet? I happen to believe that they have a very strong AI business. Gemini is very strong. Their cloud infrastructure business is really strong, growing really fast. And Waymo, as an example, that's physical AI. That's going great. They're number one in robotaxi. While others are talking about how great they're going to be in the future, Google's number one, actually giving a lot of people rides now at this moment. And they're expanding into 2 new cities, Denver, and I forgot the other city. It was announced today. So Google is loaded, I believe, from a strategic standpoint. They also provide the best PE ratio out of the big mag, 10 or so, or biggest market cap stocks. They provide the best PE ratio. You have some companies that are trading 30, 40, 50, even one is at 100 times PE ratio. So Google has really good fundamentals, is priced quite rationally, and I think is a really, really good thing for my portfolio. Analysts think it's a buy. It's been going up. Look at this chart. From April, it was trading at 146. Now we're at 211. With the good news, tomorrow we'll be at 226. And I think it's the beginning of a nice, or a continuation of this rally in Google Alphabet. You look at this beautiful chart. That just has a line all the way up to 300. That'd be awesome if it gets 300. It is not out of the question. Hitting $300 a share by the end of the year is totally possible. Of course, we've got to keep it going, and it growing up 7% is a step in the right direction. We'll see if it happens. That'd be awesome. That'd be totally, totally fine with me, because I own Google Alphabet and I would like to go along for that ride. So interesting in Google Alphabet land, interesting news. Let's keep it going. All right, let's talk about Zscaler. Zscaler announced their earnings after the market closed. Looks like the market likes what they saw. Stock is up 1.7%. This stock's getting it done. Year to date up 52%. And the reason it's getting it done is this stock was doubted. The same market that's trading up Zscaler decided, let's sell this stock off. And it created a really nice opportunity that yours truly took advantage of. And I rode that stock up and sold it at a gain and just walked away with a nice gain. And the stock continues to go up. Very good to see. Let me say hello to my man, Prad. How are you, sir? Good to see you. And hopefully you're doing well. I imagine on a day like this, traders had something to work with. And I certainly hope you did. And I hope you made some good money today. All right. So back to our friends at Zscaler. So Zscaler was doubted at a time when I thought, hey, the market's a little nuts. I think it's nuts because you have sales growth. Sales growth tells me that this business is desired by its customers. They make good software. They do cybersecurity software, and the software is desirable. More businesses want to have Zscaler software to do, prevention and security for their companies. And I saw that top line, the market's selling off the stock. Well, that's the first signal that this could be an opportunity. And the stock was selling off. Now, second thing I want to see is, well, maybe their margins are terrible, because you could have revenue growth, but terrible margins would also be a reason why investors would have a logical reason to sell off a stock. Look at here. 77, 77.9, 77.6, 78. These are terrific margins. But most businesses would love to have high 70% gross margins. This is a sign of a very desirable business. So this was the second reason I thought, hey, we may be hitting some pay dirt here with Zscaler. And of course, that look at that free cash flow going up, starting at 4 million. And over the course of time, now they're above 800 million. That, in my book, is a very desirable business. Revenue growth, margins, free cash flow. Sign me up. I got myself signed up for Zscaler and I made some money. Now the market realizes it and it's bought up the stock, excuse me. And over the year to date, 52%. Man, that looks good. It's not going very far since I guess the June timeframe. It's still a quality stock. I think it's a little expensive. When I look at my valuation, and I did update Zscaler using their fundamentals, I think it's priced 24% too high. I sold because I thought, okay, mission accomplished. It made a good return. Now I'm going to move on. I've actually moved on to a different cybersecurity stock that I think gives me a better situation, almost like the same story that I just took you through for Zscaler. Another stock is going to, I think, take me through that ride. We'll see. But it makes investing fun when you can realize something before the market and take advantage of it, make some money, and then have the satisfaction of saying, hey, I saw this and took advantage of it. So that is Zscaler. I hope they do well. I like cheering for businesses that were counted out and they come back. You know, who doesn't like that comeback story, right? They make movies all the time about athletes or somebody else that had to come back from being down and out, counted out, and they come back and do well. That's what I'm talking about. Sebastian, how are you, sir? What do I think of Klarna IPO? That's a good question. So I want to say that Klarna rings a bell, but I cannot tell you what they do. Let's take a look together. And Klarna Group is a technology company building the next generation commerce network. We have built one of the largest commerce networks in the world, measured by the number of consumers, merchants serving approximately 93 million active Klarna consumers, over 675 merchants. All right. I get what they're talking about. Now, where are these guys? United Kingdom, European. Okay, cool. I think it's a good idea. If this thing said they're located in the United States, my first reaction would have been, what's Amazon going to do about it? Because you can't do anything in the US without Amazon kind of saying, okay, we're going to let you operate, or we're going to hammer you. But I think e-commerce in Europe is an opportunity. I know that there's a couple companies. I don't have a lot to say about Klarna, but let's take a look at it. So these guys are all over. You're going Foot Locker, New Balance. You can go to Sam's Club, eBay, JD, Dick's. Okay. Got it. All right. So that's Klarna. Let's take a look. Are they providing any financial information yet? Yeah, here we go. So here's some financials. Now they're for e-commerce, 2.8 billion is not that big. Let me show you what big is. So you want to talk big. Amazon is going to be probably the first US $1 trillion company. And this is big right here. 670 billion. Wow, that's huge. Growing 11%. So Sebastian, they do buy now, pay later as well. Okay. All right. I'm going to take a look at that as well. All right. So these guys are growing at 23% on a small number. So that number is not super attractive to me. It's just okay. It's good. I don't want to like badmouth any company, but that's okay. Their gross profit is okay. I think we're going to end up with I'm going to say about 45% gross profit. Let's take a peek. Gross profit 43.29. That gross margin's okay. Not bad, but it's not good either. It's not great. So far, I'm not like falling in love with these guys. These guys are okay. But I'm not thinking these guys are going to conquer the world, revolutionize the world, disrupt the world. I think they're just okay. Let's take a look at their website. Let me look for that buy now, pay later. So pay your way through Klarna. Okay. So this is buy now, pay later. And I think I had the wrong understanding of this business. This is purely a financial stock. Okay. So these guys are more competing against the likes of everybody else in their space. Now, this industry, I'm a little careful with it. And the reason for it is this is going to work until these guys have some major losses. Like these guys are growing their businesses, they're attracting partners and so forth. But if they start experiencing some losses, like, hey, a lot of people didn't pay what they bought for what they bought, then we're talking, okay, the losses are going to mount. So that would be my apprehension. And the growth isn't all that great. I mean, it's good, but it's not great. Let's take a look at their balance sheet. It's going to be really important to have a strong balance sheet. They have a strong balance sheet. They have a lot of cash, very little debt. So that looks good. For me, I would stay away from an IPO. I don't like IPOs. I could show you a couple IPOs and it'll basically explain why I do not like IPOs. I don't care what the company's like. IPOs tend to burn investors. Here's one of my favorite stocks, Robinhood. I've made a boatload of money on Robinhood. Isn't that a beautiful number? 420%. But when they IPO'd and they were like, oh man, these guys are awesome. And then they sold off. These guys sold off like a garage sale item, like those used, bargain Adidas that were selling at a garage sale. You couldn't get $1 for them. And 84% more like a 90% sell off of Robinhood after their IPO. Same business has flourished later. So waiting to get more information on a company, waiting to make sure that business is going to work, what's going to be their market potential. That's my game. Playing IPOs, not my game. Just 80% of the time you see this. Quality businesses just sell off like crazy. More recently, we've had CoreWeave make a lot of waves. Now, I know this industry quite well, and they came out kind of a little bit flat, and then they just took off. But since hitting their peak, hasn't been the greatest experience for shareholders. So here's another IPO that's like really abusing shareholders. And I can go on and on. There's a couple IPOs that did work, but those are not the general theme. I stay away from IPOs. I would tell you that a lot of people stay away from IPOs. The people that make money are the people that ride the wave of the IPO and sell. And I think that's why you have situations like Robinhood, where you have a lot of the investors early on, they make their money and they get out. And then that creates kind of a collapsing of the stock. And now everybody's doubting it because, oh my God, it sold off. Well, let's wait until we get some really solid financials, which I did, but I didn't have to pay this price. I paid, a really low price and I'm, doing really well with the stock. So I'd rather wait for really good businesses to show me a couple years, if not a couple, quarters of really good data, then I'll invest. So back to Klarna, I don't like the buy now, pay later business on its own. I'm not sure of it. It's providing credit. They use algorithms, they use systems. And again, it's going to work until it doesn't. And when it doesn't, it's going to be a painful experience for that company and its stockholders, in my opinion. So I'd rather stay away, be on the sidelines. The closest I get is I've invested in PayPal. And here's why I've invested in PayPal. And I know that I'm in the business of buy now, pay later. Is PayPal is a diversified business. They are in payment processing. They're in a variety of technologies, including buy now, pay later. So I am exposed to that business. Now, PayPal hasn't done very well. I mean, look at that. These guys got run up during COVID, and then these guys have kind of collapsed. I thought they were going to come back better, but nope. Market said, yeah, we don't like PayPal anymore. So this is where I'm playing it. I own PayPal stock, and hasn't been a winner for me. I'm not, I sold some shares, but I'm kind of holding my position in PayPal. That's how I expose myself to Klarna. I have plenty of financial stocks. I love financials, but I'm just careful with this business because, again, if it goes bad, it's going to go bad fast. We'll see how it goes. What are you going to do, Sebastian? I'd love to know what you're going to do with Klarna. If you're excited about the space, remember, it's just one man's opinion on my side, and I'm just sharing it because I think that's what you're asking for. All right, so we covered Google. We went over Zscaler. Good story behind Zscaler. Let's talk a little United Therapeutics, up 32.83%. And this stock went up because there was news that they came out with a trial that is really going to help a lot of people. And this trial is going to take care of some lung disease. And that is really good news to some of these people that have a really bad condition with their lungs. This is going to help them. And this is a company that is making it a habit of doing some great things in medicine. Their first original drug helped people with a very rare disease that was life-threatening, life-ending, and they help people. They put those diseases into remission. Now they're on to I think this is their third successful new drug developed. And they're doing some really exciting things, including developing organs in a laboratory that would then be transplanted into a human. That makes my head explode. Just in looking at their track record, they have a chance of pulling that off. But you think about how many people are in a waiting list, waiting for an organ to be donated, and they hope that they're at the front of the line when an organ becomes available. And if it becomes available, then they have the surgery. Well, if you had a way of growing those organs, imagine all the people that would benefit and extend their lives. That's what United Therapeutics is trying to do. So if these guys keep innovating through their biotech innovation ability, look out. These guys are 18 billion today, but these guys will be knocking on the door of 100 billion because they deserve it. When you do this kind of innovation, it shows that the culture at the company is made up of people that are passionate about, bringing cures to some of these illnesses that are really hurting people. And the passion is real. The founder of this company, she created a drug to save the life of her daughter. Her daughter had this rare disease, and that person developed a drug that helped save the life of the daughter. So it's real. Their passion is real. And I really enjoy learning about this company, getting to know them. And today I celebrated their rise in the stock. This is one where the good guys win. The good guys won the day, I would say, because you know what? They still got to execute and continue to grow. So that's United Therapeutics. Tremendous balance sheet. They have good revenue growth, and now they have prospects of doing that much better. So they've had solid growth, extreme profit. Remember, I want growth. I want gross margins. Well, try this on for size. 89% gross margins. Fabulous. Fabulous. And that's because they've created these medicines that help people. Once you've created the science and you have the formulation, you've tested it, it works. It's a very, very prosperous business because you're selling these units at a very low cost to manufacture, and you're helping these people. So doctors will recommend your product, your medicine, your pharmaceutical to as many patients as you can help. So that 89% gross margin, beautiful. So we have revenue growth, high gross margins, and look at this cash flow. Over $1 billion of free cash flow from this little company. Man, cash flow excites me. That balance sheet is getting overloaded with cash. It is gonna burst at the seams. So what they're doing is they're buying back shares. They have $3 billion of cash, no debt. So they decided we're going to buy $1 billion of shares back. And back when they announced it, I did the calculation. They were going to basically buy 9% of the shares outstanding off the market. So this business is just, everything that I want in a business. I think they're going to keep trading higher. I think today caught the attention of many, like, who is this company? What the heck? And if you study them, there's quality behind this company. Culture, innovation, growth, profit. They're stacked up really nicely. So that is United Therapeutics. They've been a winner for 5 years, super winner this year, and my favorite stock of the day. I guess I'm pretty shallow. You do 32% appreciation in a day. You win that spot for me. So United Therapeutics, great day. Good to see that they did well. One of the good guys won. Good to see you, Genetics Smite. Hopefully you are doing well, sir. All right, let's flip over to Alibaba. And Alibaba is the hottest, batter in on Wall Street. To use an analogy from baseball, pitchers do not want to face Alibaba because they just get on base. They had a fabulous earnings. The main story out of their earnings is their cloud business is growing by 26%. It's a huge cloud business, and they are strategically located in Asia, where there's going to be a lot of AI and other workloads, moved over to the Alibaba cloud. And their position is very strategic, and I think the market woke up. Whoa, hey, Alibaba is worth a lot. And absolutely it is. You think of this stock, right? One thing that I want to show you, and I could at the same time talk about the great Charlie Munger, one of the legends of the game. And Charlie Munger, he went to bat for Alibaba. He talked about their strategic location, that they could be the company, the e-commerce and technology leader for Asia. They most definitely will be, I think. So he really went to bat, and the stock really sold off after, COVID. We had a lot of Chinese government-led shutdowns of businesses. So the economy in China really took a hit, harder than we did here in the United States. So this stock sold off by 79%. But the business continued to get bigger, more valuable, more powerful. Mr. Munger passed a year and a half, 2 years ago. Man, but let me tell you, Mr. Munger is one of the legends. I learned a lot. I loved listening to him. Sometimes he would say things I completely disagreed with, but I got a good laugh out of it, at least. Like when the time he said that Bitcoin was like rat poison, that made me laugh for weeks. And he just didn't understand it. So something he didn't understand, he feared. But Mr. Munger was right about Alibaba. And I've been an investor in Alibaba. I bought at a good price, dollar cost average into the stock. And now I'm just riding this one up. I think it could go back to $300 a share. So we're going to have a nice ride up to 300, I think, over the long haul, maybe over the next 2 years. But what's going to hold Alibaba back? Who's their big competitor in Asia? Nobody. Nobody can stand up to Alibaba. They have a giant moat over in China. They have really strong business. They, like Amazon, have partnerships with vendors that come on their website. It's really neat. And they own very little inventory. They're partners, the people that go on the Alibaba platform, like Amazon, right? A lot of the Amazon product is coming from the vendors. The vendors will use the Amazon network supply chain, but it's the products owned by the vendor. Amazon's not taking that inventory. They're not deploying cash or capital to buy inventory and put it in the warehouse. The partners are carrying that inventory. Alibaba does the same thing in Asia. So that is a very good business, and their cloud business is rocking. Last note on Alibaba, they said, hey, we're going to develop our own chip that's going to be used for AI workloads. Now, are they going to nail that particular technology and compete with NVIDIA? No, but they don't have to. They just have to get close. They just have to provide something that's useful, because the scarcity of NVIDIA technology is real in Asia, both because of government, restrictions where the US is not allowing certain chips to be sold in China, and other things, maybe cost factors as well. Now you're seeing the US government's going to charge an outgoing tariff of technologies that go to China. Well, if you put enough restrictions and cost on the NVIDIA technology, it opens up the door for innovators like Alibaba to put out a chipset that's going to do really well. So the market really likes those stories. I love the stories, and I really like Alibaba stock. I think it's discounted. I think Alibaba stock has been discounted. It's still discounted today, even though it's run up nicely. And my valuation of Alibaba shows that I'm still operating with a 30% discount on Alibaba. That's because their cash flows are so darn good. Their profits are so darn good. They have a 30% discount, which is why I continue to dollar cost average into Alibaba. It's hard to do that when the stock is, having a good year. It's going up nicely. And when it takes off, this thing takes off. This thing is just streaky. And more recently, it's really taken off. But we've gone from mid-July to this point, it's up 33%. Nice. I think it's going higher. And hopefully we have a nice sustained rally up to $300 a share. That would be a beautiful thing for Alibaba. So Alibaba had a great day today. Really, really glad, because I think Alibaba is just worth a lot more. And I'm a US-based US investor. Most of my stocks are here in the United States. I'm good with that. It's good to diversify into another region. That's what I'm doing here with Alibaba and a couple other stocks in China. I'm also diversified a little bit in Latin America. I'm beginning to diversify more in Europe. And the reason for it is, hey, I want to tap into the growth and opportunities that are in Asia, Europe, and Latin America. There's nothing wrong with that. Diversification is a tool in my bag of investing for long-term success. So Alibaba, good stock. Love what's happening over at Alibaba. All right, guys, I'm not getting a lot of stock requests, and I'm just going to keep rocking on my side. Thanks so much for tuning in. We've got a lot of people on. Thank you so much for joining. We're talking about stocks through the lens of value investing with an emphasis on revenue growth. I want stocks that are growing, stocks that value well, that have good balance sheets, that are destined to be very good, valuable companies over the long haul. Let's talk about eToro. eToro is a stock that is new. It's new to the scene. It IPO'd recently. One more IPO story. So here's an IPO, May 14th. And the market didn't receive it all that well. It just hasn't gone anywhere. It's down 30%. So this one here is kind of like head scratch. Like, why is the market not like eToro? Well, let's take a look at the fundamentals, and I'll show you why I started to buy just a small position in this stock. So when we look at their financials, we got really good growth, incredible growth. Now, when I look at Robinhood and Futu and Interactive Brokers and other stocks that are comparable to eToro, this revenue is real. No big surprise. There's a lot of trading going on. Why? Stock market's on a long-term bull rally. Well, people want to be investors when things are happening. So these companies are really stacking up the revenue. These guys are growing nicely. Nice revenue level at $13.1 billion of revenue. That's terrific. They're profitable, good free cash flow. Look at this cash flow, almost $300 million of free cash flow. Now, when we look at the market cap of this business, only 3.9 billion. This is a small cap. Wow, revenue 13 billion and the market cap's less than $4 billion. Wow, that's opportunity knocking on my door. PE 6.47, forward PE 20.5. That looks pretty rational. Even analysts are saying, hey, this is really discounted. So, I just saw too many good things and I started buying into the stock. Now, I'm not claiming victory just yet, but it's had a couple of good trading sessions. We'll see if it goes up. There was some selling due to some funds wanted to get out of this stock. And at the end of the day, if they're going to drive down the stock on a really good quality business that's growing top line revenue, attracting more customers, showing that, hey, they really like this platform. Customers do, the market does, more investors are coming and creating accounts. We're good to go. I want to be an owner in that business, especially if they have a solid balance sheet, good cash flows, and good profit. So this is a stock that is interesting. It had a good day. Now, the reason I wanted to pick it out is it had a good day on a terrible stock market day. So it's like, wow, this one stood up tall because most of my stocks were down. And this one was up 5.25. Woo, nice. Keep it going. Keep it going. I'd love to see this one be another one of those, hey, this is a company that was counted out and it's going to come back and outperform because of its fundamentals, because it's growing its business, because it's getting its business handled. It's growing its business profitably, generating cash, loading the balance sheet with cash, keeping it clean of debt. Those kinds of things are going to build a really good business. So eToro looks good. Small cap, less than 4 billion. These things, you could wake up 2 years from now and they're 40 billion. I don't want to wake up 2 years from now and have this thing 40 billion without me playing into this stock. I don't want to sit on the sidelines for that time. So we'll see where this one goes, but I'm really, optimistic this thing could really make things interesting for investors, because other stocks like Robinhood Robinhood went from really small to just great size, $89.6 billion. They're going to be added to the S&P at some point. But you look at this stock, boy, when it was trading at $8 a share, these guys were under $10 billion in market cap. Now they're way up there at 89.6. Could I see that happen for eToro? It's a possibility. And I'd love to take that elevator ride with my capital with eToro. I've taken it with Robinhood. I've taken it with Futu. Futu is another company that is in the same space, but offering brokerage services over in Hong Kong, mainly servicing the China market. Year to date, up 133. 1 year, up 194%. And this makes total sense. People in China save their money and they want to invest in stocks. Futu is up 74.74%. This is a $26 billion market cap company, but not too long ago, these shares were, being sold, garage sale item, $29.88 a share. And now they're up to $187. So not too long ago, these guys were about a $9 billion market cap. Now they're 26.5 billion. So this is really neat that we have another business going into the same type of business, doing business primarily in Europe. I know they have a lot of customers in the UK. They're headquartered their operations are mainly in Israel, and they're targeting a part of the world that invests in stocks. So this business makes a lot of sense to me. I'm looking forward to seeing what happens next. I'm fingers crossed that their valuation, I think they're heavily discounted, is going to really work. So, all right. So let me check the chat here. Zubio, how's Google looking? It's looking good, buddy. It's looking real good. I mean, 7%, up 7%. Isn't that a nice looking number? Be nicer if I had a 1 in front of it, 17, but I'll take 7. 7 is great because this is a massive cap. I mean, you got $2.56 trillion. If you go 7% against that, we're talking about, geez, what is that? About $150 billion of market cap that's going to be added to Google Alphabet tomorrow if they open at 7%. That's a lot of capital going to Google Alphabet. It's not like these small caps I'm talking about. That's less than 4 billion. Google Alphabet's 2.56 trillion. They go up 7%. That's a lot of capital that has to be deployed to buy those shares. So really interesting to see that kind of move from Google Alphabet. It'll be interesting to see it trade tomorrow, and I look forward to it. All right, guys. So we've covered the list of stocks that I wanted to cover. Let's see if we've got any questions in the chat or any stock request. I think we covered the winners and losers today. The big cap stocks, we had NVIDIA go down a little bit, but they're still having a very good year to date. Microsoft, ditto. Apple is still not doing well. Tesla's still not doing well. Google tomorrow will be looking really respectable. You add that 7%, you're up to 18, positive 18, 19. They're already beating the S&P. So I think it'll be a good day tomorrow for Google. Amazon is not getting it done, but it's a super valuable business. I think it's an opportunity to pick up more shares for me. And then Meta's getting it done, 25%. Broadcom is really overpriced. Look at my video on semiconductor stocks, and we'll see what happens. I think it's gonna at some point make a turn for the worse. And the PE ratio is super high on that stock. Don't like it. Berkshire Hathaway is looking better. It's probably near the S&P now, so that's good. All right, Little J, how are you, sir? Have you ever looked at Intuit? I have. Intuit's a quality business. They're always priced high. It's a software business. They do TurboTax, which I've used for, a long time, like 30 years. And I've done my taxes with TurboTax. And they also do QuickBooks, and they do MailChimp. Now, their business, for the most part, they've been a good stock to own. 5 years, you're up 90%. Now, their earnings were not great. In fact, they were kind of poor, and they sold off. Let's take a look at their earnings real quick. And I'm not sure if I have a valuation, but if we don't, we can construct one. All right. So their revenue is growing at 15.6. Looking at the latest quarter, the revenue growth was good, but what did the market not like? They didn't like something. I think the guidance wasn't very optimistic, and I think that's what took the stock down. Free cash flow looks great. The gross margins look awesome, 80%. So revenue growth, good gross margins, great cash flow. Balance sheet, I believe, is good. Let me take a peek and see if I have Intuit as a valuation. I have so many valuations on the valuation sheet that, no, I don't have it, but we can create one real quick. In general, I think Intuit's always been priced too high. And Intuit's a lot like Salesforce. Salesforce creates software for the sales process, the marketing process, the customer service process, where Intuit, the QuickBooks software, it does like accounting. It does that kind of thing, more accounting and a little bit of procurement and budgeting and so forth. TurboTax does, tax filings for individuals. And CRM is more enterprise. I think Intuit's more consumer or small business, but it's still comparable because they're both software as a service. And you have people that are coming back to buy your product or renew your product. And that is very sticky business that is high gross margins. That's the best. When you have a customer that keeps coming back and buying product from you at a really good price where you make lots of money, right? So that's the kind of business I want to invest in. So Intuit is a big success story. I really like their story. A little bit about their story that you might find interesting is when they were founded, right? They had kind of a year or two when they were running out of money. And the founder, man, he begged the developers and everybody that worked for him, please stick around. They all had like really good RS um, restricted shares. And finally, the business started to work, and everybody who was an early employee became, very, very wealthy. But he had to kind of convince a lot of the employees to just stick around because things got really tight and into it. Really neat story. All right, so let's take a look at their fundamentals. I'm going to open up a screen that you guys can't see just so I can multitask. We're going to do Intuit. Do it, create it from scratch, and see how we value a stock. So Intuit, shares outstanding, 278 million shares outstanding. I'll update that number real quick. Now let's take a look at what kind of trailing 12-month cash flow does Intuit provide. $6,093,000,000. All right. So I am going to update this number. $6,083,000,000. And their revenue growth was growing 15% in the fiscal year. So I'm going to use, in the previous year, they grew at 13, previous year 13. That's very good growth. So we're going to go with 15% revenue growth, and we're going to grow the initial number by 15%. When you look at this number, this is as if we're looking forward 12 months. So that is what we're going to do. I'm going to update this to describe it accurately, which is the trailing 12 months times 1.15. And we've got that number loaded. Now let's take a look at the balance sheet and see what kind of cash position and short-term investments we've got with Intuit. I want to make sure this balance sheet is solid. I don't want a bunch of debt that is going to be a burden for this business. The debt is $6,570,000,000 compared to the cash on the balance sheet. Now, this is a big business, so that's not a lot of debt. In fact, when I look at debt to EBITDA, it's less, it's 1.15. So we are good. If it's below 3, the balance sheet's okay. The closer to 0 or at 0, that's a very high quality balance sheet. So we just did a valuation. This model that I created looks at the cash forecast and brings all that cash I expect they're going to produce in the future, discounted by 8%. It says, hey, all that cash is worth $216,801,000,000 based on a discount rate of 8%. Add cash, take away debt. The equity value is $214.7 billion. The market cap of this business is $184 billion. So we have a 14% discount available on Intuit as a stock. If we use the discounted free cash flow method that I altered using adding cash and taking away debt. Now, when we look at earnings per share, let's take a peek at that and see where that valuation lands, because we just did the valuation based on free cash flows, but let's take a look at it through the lens of profits. How profitable are these guys going to be? And how can we discount those profits to arrive at a fair value or value of the company? And the earnings per share they expect in the fiscal year we're operating in is $23.46. PE ratio 25 is most definitely deserved. I could probably go 36, but let's stick with that for a minute. Growth rate of 10%. So this is probably fairly priced. Okay. This is a good quality business, and we're dealing with a discount of 9%. So is this one like making me jump out of my chair and want to buy shares? Not exactly. I think it's a quality business. It's a very good business. It's also very recession proof, because every year you're going to do your taxes no matter what. You have to do your taxes. There's no, if and buts about it, and you're going to buy that TurboTax software to get that done. So this is an idea of, maybe I could buy a few shares, especially if it keeps selling off. So that sell-off has created a little opportunity in Intuit, not a massive one, but a good one. That's where we value the stock there. So in answer to little J's question, that's where I land with Intuit. I think it's discounted by 9%. This is a high quality business. I have a lot of respect for this business. I've been a customer for more than 30 years, buying that TurboTax software, doing my taxes. I know their QuickBooks software is good. A lot of small businesses use it. Solid business all the way around. All right, I'm going to make myself a few notes here just to come back and say, hey, you just completed a valuation. Make sure you log this, because I like sharing this research with paid members. Then they can refer back to this and say, hey, how much is Intuit worth? Well, I wonder what the analysis that Victor completed came up with. And that's why I like storing this information so people can refer back to it. I have more than, I guess 200 valuations at this point. And paid members get a copy, or they access a shared folder that has all this research. I think it's useful. It's useful to see what people are valuing a business at. And that's why I do this. That's why I have a really extensive watch list. That way we can use this information to make decisions, to see what, hey, what are other investors thinking? What are they thinking when they look at these fundamentals? How do they value a company? And hopefully members of the channel see value in this. I think so, because people give me feedback that they like referring to it. I update this thing twice a month. That way it's not too stale. I think twice a month is often enough, but not too much of a burden, because I have to do a couple things to load it and make sure that it's going to be accessible. So there we go. We updated into it. Now, next time I refresh the shared folder, this puppy is going to be up to date and ready to show the valuation on Intuit. Little J, good to see you, man. I appreciate you being a member, and I appreciate your question on Intuit, sir. All right. Thanks. I appreciate that, buddy. Good to see you. Michael Anthony, what is up, man? Was there any certain reason for today's sell-off? Now, the story that I woke up to was that I think the tariff thing, right? The Supreme Court, I believe, made a decision that the tariffs may not have been in the rights of the president, and they may be deemed to be illegal. If that's the case, the U.S. government is going to have to return a lot of the tariff money. If that's the case, then the credit worthiness of the United States took a hit and interest rates spiked. When you have a spiking of interest rates, it pulls value away from stocks. Equities take a hit because investors if you offered bonds, just to make a big example, or a clear example, if investors had the ability to make 15% on bonds that were very low risk, the stock market would be near zero. Why? Who would want to take a chance when you can make 15% on bonds, which is very low risk? So when bonds, their yield rises, it competes for capital against stocks. The more attractive bonds get, the more capital they pull away from the stock market. And that was the one lever that caused the sell-off. The higher the interest rates go, growth stocks that are really expensive are going to be hit. And that's what drove the stock market down. That's my observation of what happened today. We saw some big stocks get hit, some small caps get hit. It was pretty universal, lowering of stock prices across many, many companies in different segments. The stocks that did go up a little bit, healthcare, because those tend to be kind of contrarian. If things are bad, those tend to do good. Staples, things are bad, those tend to be good. Energy was up because oil prices were higher. And some of these utility-based stocks also went up. So that's what I saw, and that's what I'm going to report. Looking at tomorrow, what's tomorrow going to look like? Is it going to open up higher? Looks like we have a chance of opening higher on the NASDAQ, the S&P. These aren't big numbers, so it could really change between now and a 9:30 a.m. Eastern tomorrow. We'll see. Speaking of tomorrow, I'll be streaming with Daryl. So you get two different points of view on stocks tomorrow. You'll see my fundamental analysis, that I just took you through on a couple of stocks, but then Daryl does his technical analysis, which is, really, really good. I love listening to Daryl and seeing his point of view on how he sees a stock. So tune in tomorrow morning if you'd like to see that. It starts at 9 a.m. Eastern. We'll probably go for about an hour and a half. If you got time in the morning, tune in. It'd be great to have you. All right, everybody. So it looks like I've gotten through all my material, gotten through the questions. Thanks so much for everybody tuning in. If you're not a member, I'd like to invite you to consider being a member. Being a member comes with really nice perks, really nice benefits. To begin with, if you become a member of the lowest, least expensive level, you get access to that shared folder. You get access to live streams if you want to nominate a stock. If you go up other levels, you can send me a stock that I'll do a deep dive video on, or include it in a deep dive video that includes maybe other stocks in that industry. If you're a super investor, this, one-on-one call, I share my portfolio, trades, just about everything. And I'm happy to report that I'm getting really good membership across the board. I really appreciate it. Everybody who's a member, thank you so much. It means a lot. And it just means that, I'm kind of providing something that people are finding valuable. And I really, really feel it feels great. It feels great that people are doing something with my research. And it'd be great to have more people join. We also, on live streams, have gotten a lot of really good ideas on investor calls. Just the idea generation as we get more people involved really goes through the roof. I've found some really good winners over the last year by people bringing up a stock. We look at it, looks awesome, especially small caps. And, it's just going to continue. I think the idea generation as we get more people involved is just going to get better. So that has been a real big reward. I encourage you to take a look, go to the home screen. You'll see a join button. That's home screen of my channel on YouTube. Check out the home screen or the join button, and you can see if it's something you'd like to do. It'd be great to have you. All right, everybody. So that is it for the stream this evening. Thank you very much for tuning in. Thanks for all the comments, by the way, and watching my videos. I appreciate it. You guys take care and have a good night.